One more thing which we missed out is remit to address. There is a screen called remit to address, wherein you need to specify that particular remit to address. When customer is actually remitting, okay, uh, to which address you need to, if it is a, especially if it is a kind of as a check, okay, to which address you need to send that particular check. So in the remit to address screen, you specify the address wherein customer needs to send the check to us, and that particular remit address is basically used in most of the invoice print programs or in other places. Most of the invoice print programs are other places which are custom programs. You actually derive the remit to address from this particular screen. So in the invoice copy, when you run your invoice copy, the remit to address whatever you mention here will be printed on the top of the address. So when the customer is looking at that particular invoice copy, he understands that, oh, I need to send that particular check physically to so and so address. So that is the only reason for the remit to address. Go to setup receipts. Where is that? Remit AR remit to address. Did I create a remit to address? Let me check. I think I had already created a remit to address. So first search for the address. So what you need to do is first click on create remit to address. Okay. I mean, in this case, as I had already created, now I'm clicking on update. Here you need to mention the country name and the address. So this is the address which will be printed on invoice copies, and the customer will understand that this is the address which they need to use for sending of the checks. Okay, so the physical address where they want to send that particular checks. And there is something called receipt from. Okay, I mean, this is the top part and this is the lower part. You can use a different remit to address for what do you call different countries. So you can click on update and you can specify that I want to use this remit to address if the invoice, if the customer bill to address is from so and so country. The customer bill to address is India and state is so and so. I want to use this particular bill to address. But if there is a different customer bill to address, say US, then I want to use a different remit to address. So take an example: you got a customers in US who want to give you a check. Obviously, you do not want the customer to send, you do not want the customers to send the particular check to your India address. You need to give them some kind of a local address. So what you can do is you can create a remit to address for say US, and then here you can click on the country as US, state as whatever the state of the US, and then click on apply. So that particular address will be used for those customers who are based out of US. So how does system understand which remit to address to use? So when you create your AR invoice, there is something called bill to address and ship to address. So in the bill to address and ship to address, there is a country which is mentioned there. So depending on that particular country, okay, system will pick up the appropriate remit to address. And the other option would be, so you can create any number of remit to address. Don't mention anything here, and then based on your custom program, you can write a logic to print appropriate remit to address based on the bill to or ship to customer or some other logic. Any questions here? Okay. Now we'll go another topic: cross currency receipts. So as the name itself says, cross currency receipt. So that is your invoice is in one currency and receipt is in another currency. In AP, it is not possible to create your AP invoice and AP payment in different currencies. Always your invoice currency should be same as the payment currency. But whereas in AR, it is possible to create invoice in one currency and receipt it in another currency. So take an example, you create an invoice in INR, but you got the receipt from the customer in USD. That is possible, and that can be created. I mean, that is created through the same receipt screen, but that is called cross currency receipt. And now we will see how we can create the cross currency receipt. So we have a lot of invoices which are entered in INR currency. Okay. Now we'll try to create a receipt in USD currency. And in order to do that, first there should be an exchange rate available in the system between INR and USD for the today's date. Okay. Now try to enter the exchange rate first. Otherwise, when you try to create a transaction, you will get an error message. In a normal live environment, generally, as I said earlier, exchange rates are directly is a feed from your service provider. It could be a bank or from some other financial institutions. You get the feed. So in our current client, every day we get an exchange rate the previous night. So for 7th October exchange rate, we get the file on 6th of October, which is like yesterday evening. And for 6th of October exchange rate, we'll get the file on 5th of October, which is one day prior to that, so that the next day when the users come, they should be able to create a transactions without any issues. And if there is an issue with the exchange rate file, then it is actually a P1 in every kind. The reason being, if there are no exchange rates available in the system, or if there is an issue in the file which is getting processed, then it's a P1. The reason being, you will not be able to do a data entry in any of the module. I mean, foreign currency, you will not be able to complete or create a foreign currency transaction in any of the module. Functional currency is fine, but foreign currency, you will get an error message in almost all the modules. You take your order management, purchasing, inventory, AP, AR, in all the modules you'll get an errors. If I remember it correctly, exchange rates are already available. Do you guys remember the exchange conversion rate type, whatever we are using? Is it spot or corporate?
Corporate.
Yeah.
Corporate.
Okay. So somebody has already entered this exchange rate. Okay. Looks like Rohit has entered this. So now go to receipts. And one important thing is, in the bank account definition, there is a checkbox called allow multi-currency. You need to check that particular checkbox. Only once you check that particular checkbox, system will allow you to create the receipts in different currencies. I can show you that particular checkbox. I mean, during our what do you call bank account definition, we have already set that, but I'll show you that checkbox. Now we are using ICICI current. So click on update account. Not in this screen. Yeah. Yeah. Multi-currency. This multi-currency is payment for AP module, but yeah, multi-currency receipts. This is the checkbox. If you do not check this checkbox, then you will get an error message when you are trying to perform the receipts, cross-currency receipts. Receipt. So the receipt amount is in say USD. So change the currency to USD. Okay. Exchange rate type of corporate defaulted from profile option AR default exchange rate, which is good. And USD amount is say we want to make a payment against an invoice which is 15,000 rupees. So I just want to create an invoice for say the receipt for say $300, just roughly. We have used it 60 rupees, right? Maybe 300, yeah. Okay. So this is where exchange rate type is automatically defaulted. If you want, you can come here and you can change the exchange rate type to some other exchange rate type, provided there is an uh, rate available. And there is something called user specified rate. So this functionality is available in all the modules. So in all the modules, whenever you try to enter a foreign currency transaction, exchange rate type will be defaulted. And if you want, you can change it to, so if I use corporate, then this is the exchange rate. Okay. If I want, I can change it to user. So when I say user, it is asking me to enter an exchange rate. If for some reason I do not want to use the exchange rate available in the system, but I want to use my own exchange rate. One second, should we say in system, I think it is 60 rupees. So I want to use for 66 rupees. It should be 0.015. Yeah, I want to use 0.015. You can do that by selecting the rate type as user. So this particular user defined exchange rate type is applicable only for this particular transaction. Now for only those transactions wherein you want to enter your own exchange rate, then you need to select the exchange rate type as user. So as the name itself says, it's a user can enter his own exchange rate. Okay. And now Raymond's apply, pick up any open invoice. I just want to pick up say this invoice, apply date, this date, and you can see here, okay, there is something called allocated receipt. Okay, so we are using a exchange rate of 0.015. Okay, that is nothing but 66 rupees. So 300 into 66 is 19,800. Okay, but our outstanding amount is only 15,000. Okay, so that's the reason there is something left under unapplied. Okay, if you do not want to go into that particular scenario, what we will do is we'll decrease the receipt amount. What I'll do is instead of 300, I'll say only say 150. Okay, now we will see. So 150 is my USD amount. Converted it into INR is 150 into 66, 9,900. And then it is 150 into 60. Okay, got it. I'll explain you this. Give me a minute. Okay. When you have created an invoice, okay, for 15,000 rupees, the exchange rate was 1 USD is equal to 66 INR. Okay. Now, when you made a receipt, okay, that is say today, exchange rate is 1 USD is equal to 60 INR. Okay. Now, you created a receipt for 150 rupees. So what first system is doing is it is converting 150 multiplied by 60, 9,000 rupees. Sorry, I think it's other way around, right? 1 USD is equal to 60 INR when we have created the invoice. 1 USD is equal to 66 INR when we are creating the receipt. Am I right?
Yes. Yes.
Okay. So first thing what it is doing is when I am trying to create a receipt for 150 rupees, first it is trying to convert that 150 into 60, that is the exchange rate as on the invoice date. So it is now trying to reduce the outstanding amount of the invoice by 9,000 rupees. Make sense at this stage? That is what you can see in under amount applied. Okay. So on the invoice date, whatever is the exchange rate is 60 rupees. So even this particular 15,000 got converted into USD using in 60 rupees. So we got an invoice, the receipt for 150 rupees. So 150 rupees multiplied by 60 is 9,000 rupees. So out of this 15,000 INR, system is now taking outstanding balance, reducing outstanding balance of 9,000 INR. So that is what you can see under amount applied. That is the first point. Okay, now the balance outstanding is 6,000 INR. 15,000 minus 9,000 is 6,000. Okay, that is the first point. And second point is, now this 150 rupees, today's exchange rate is what? 66 rupees. Okay, I think it's not even 66. We have entered it as 66.66 something. Allocated receipt amount is 150, which is USD amount. Exchange rate, whatever we system is using, is 0.0167. I think that is what we have entered. Okay, this is the exchange gain or loss. So the difference between 9,999.99, which is nothing but roughly 10,000, minus 9,000 is 1,000, that goes to the exchange gain or loss. So the difference between the exchange rate between the invoice date and the receipt date goes to the exchange gain or loss account, and your invoice is reduced by only 9,000 rupees. 6,000 rupees is the still outstanding amount. So now if you try to save this, okay, exchange gain or loss is 9,000. If you go back and check this particular invoice, it will show a balance due of 6,000. So amount applied is 9,000 rupees. Go back to that particular invoice. Okay, so 15,000 is the original amount, 9,000 is the receipt, because here in this particular screen the currency is INR, so obviously it should show everything in INR. Okay, 15,000 is the INR original amount, 9,000 rupees is the INR receipt amount, and balance is 6,000. And from this particular screen again you can go to tools, sorry, actions, installment, which will give you the details of the receipt whatever we have created.
But in the customer front, that he did a payment of 10,000, right, Arvind?
Customer has actually given you 150 rupees, sorry, 150 USD.
Right, he is thinking that at the rate of today's USD.
Yeah.
So in his view, it is a 10,000 payment, but from the supplier, from our organization front, it is 9,000.
No, okay. In his view, he cannot call it as a 10,000. In his view, in his view also, 150 rupees, 150 USD is converted into INR of 9,000. Because ideally, if you do not want to get into all those stuff, you should have directly given us 9,000 rupees. Okay. But now what we tell him is 150 USD, whatever you have given, okay, is converted into INR for an amount of 9,000 INR. So 6,000 rupees is still due. So now in future, either he need to give us 6,000 INR or he can give again in USD. Again, that will be converted using a different, whatever the explanation, whatever we have given.
Arvind, I have a doubt here. See, first of all, we are creating the invoice in INR. Okay, we are sending the invoice to customer with INR amount, but he is paying the USD amount to our bank, which is in India, right? Mm-hmm. So bank will receive the USD amount. Mm-hmm. Okay, but ideally, when it shows the balance in the bank, it will show INR only.
Yes.
Okay, yeah. So yeah, so if bank is receiving $150, okay, it will convert into INR based on system date only. I mean, for example, if it received, yeah, right. So if it received on 7th October, it will convert based on 66 rupees only, right?
Yep.
So, right. So ideally, when you reconcile this with cash management, there is a difference because you are settling the invoice for based on 60 rupees as a conversion rate, but in your bank you have something for 66 rupees.
Yeah.
But there is a difference, right? So because we already have that extra 1,000 rupees as conversion gain or loss. So
Yeah.
uh,
So remember,
uh-huh.
yeah, I mean, this is a good example wherein your line may not get reconciled through automatic bank reconciliation process. So the reason why cash management bank reconciliation process is not popular among the clients is there are a lot of limitations or a lot of practical challenges wherein your bank automatic reconciliation may not work properly or may not work, and a manual intervention is required. So in this scenario, what we need to do is this is not just example like wherein we need to manually select that particular line in the cash management. We need to manually reconcile that, okay, with this particular receipt. And for the difference of 1000, I mean, here system has already taken care of an accounting, okay, but your bank reconciliation is showing 10,000, but your from your receipts perspective, the receipt is actually against 9,000 INR. You need to manually reconcile that particular line item. Take another example. Yeah, as I mentioned earlier, like my receipt amount say 10,000 rupees, but after deducting of the bank charges for the what you call checkbook for the outstation checks, bank has credited only 9,950 in my bank account. So even in those scenarios, you are manually coming here and doing a manual reconciliation. So in the cash management, we got automatic reconciliation and bank reconciliation. The way it works is basically once the cash management is the bank statement is loaded in the cash management. I'm talking about from my current client or like my previous clients, not in the current client, sorry. So what we used to do is we load the bank statement in my cash management and then run the bank automatic reconciliation process. 60% of the transactions will be reconciled. There will be roughly 30 to 40% of the lines which will not be reconciled, and that is where a manual activity is required, wherein we need to get into these kind of scenarios, and you need to manually check that and then click on the reconcile button. So the reason why your cash management is not popular is this is one such example. So 100% of the transaction will be never be reconciled your using your cash management bank reconciliation process. There will be always some open items, at least 20 to I have seen like at least 20 to 30% which are open items because of all this kind of stuff. And if you have in this case, if you have set some kind of a tolerance, okay, I mean this is actually a huge amount like 66 60 and 66 rupees. If you set some kind of tolerance of say 2% 3% something like that, in some cases even this also get automatically reconciled. But if there is a huge exchange rate difference, then a manual intervention is required there.
Okay, and see, so in this case, then ideally, even from a customer perspective, he paid us 10,000 rupees.
Again, that's what I'm saying. It's not 10,000 rupees. It's only 9,000 rupees. The reason being, we need to explain him. If you want to give me 10,000 rupees INR. Okay. But if you are giving me USD, I am considering your amount using my exchange rate as on invoice date, which is 60 rupees. So 1 USD into 60 rupees is 9,000, and my outstanding amount is 6,000, remaining 6,000.
Okay. Okay. So then,
See, these are
the customer is.
sorry, yeah. Let me complete. So these are the practical scenarios wherein you are actually what you call sending money in a different currencies. Even today, like if you when you are trying to send money from say your country to your home country India, okay, there are different service providers. Some service provider may give you say 1 USD is equal to 66 INR. Some service provider may give you only 63 rupees. And if you ask him like why you are giving only 63 if the market rate is 66, then he says that is my rate. Similarly, even here, if the customer is saying that he's going to pay in USD, then you can say that I'm using my corporate exchange rate or I'm using my exchange rate as on my invoice rate, which is 60 rupees, and I'm going to convert my 150 USD to INR only using 60 rupees. Okay, and 9,000 is the only balance which will get reduced. That is my rate. If you want to give me, if you do not want to get into all this stuff, give me in INR, which will be pretty straightforward.
Okay, got it. So then, when the customer is paying $150 and we are getting 10,000, and we are still showing to the customer that there is an outstanding amount of 1,000 rupees, right?
Yeah.
So From our perspective, the customer is paying 11,000 rupees, right?
Not 11,000, 9,000. I'll give you an accounting entries, then you'll
No,
understand.
no. I'm saying, see, in the bank we are getting 10,000, okay, but still we are showing to the customer that there is 1,000 balance. So, for example, he had paid that 1,000 also.
Yes.
The balance 1,000 also, right? So then we are receiving 11,000 rupees.
I mean, don't call it as 11,000. What you do is like in this example, okay, in this example, so take this is example, say, okay, 10,000 INR, 9,000 is what he has paid now, okay. I mean, like say for 9,000 he has paid 150 USD, okay, and then 1,000 INR. So what you're doing is 150 you are converting into INR using this rate, and then actually you're calling it as 11,000, but it's not exactly kind of 11,000. He has paid us 150 USD and 1,000 INR. 150 USD is converted into INR using 60 rupees exchange rate. So if you ask me as a customer, I'll say that you paid me only 10,000, 9,000 plus 1,000.
Yes,
But
agree.
what you're doing is you're converting like 150, you're converting 150 USD into INR using 66 exchange rate. Okay, then you are arriving at that amount as 10,000 plus 1,000, you are calling it as 11,000, but that extra 1,000 is actually going to my exchange gain or loss account.
Okay, exchange gain or loss account, right?
So
Okay,
yeah, so if you get into the accounting entry, first when the original invoice is created, I mean taking this 10,000 as an example, original invoice is created, then the general entry is receivable account debit 10,000. What is the account which will get credited?
Cash account.
No, when you are creating an invoice,
Revenue.
revenue account is credited. Okay. If I directly do if I get a cash or say so then it will be bank or cash account debit. If you take a scenario, everything is in INR, bank or cash account debit 10,000, and then receivable account is credit 10,000. It is pretty straightforward first scenario. Okay, so your receivable got reduced by 10,000 and 10,000. Okay, take an example. He has given the amount in USD. Okay, then your bank or cash account got debited with 9,000 in this example. Okay, receivable account is credited with 9,000. Okay, and another entry is the exchange gain or loss. Okay, bank account debit 1,000, exchange gain or loss 1,000. Okay, and in future again he's going to give pay that remaining 1,000 in INR.
Okay, so this will be receivable account again.
Yeah. Okay. Yeah, in one way you can say that yes, your bank account is 9,000 plus 1,000 plus 1,000 11,000, but that extra 1,000 has gone to your exchange gain or loss. You are not crediting that 1,000 to receivable account. Receivable account is now only 9,000 credited, 1,000 credited here. So now receivable account got knocked off with exactly 10,000.
Okay,
Okay.
got it.
I mean, like one way
So
you can call that extra. You received extra 1,000, and that particular 1,000 has gone to your exchange gain or loss. But that is what you want to do if he is paying us in the. I mean, you can call it as a kind of a penalty or whatever you call. Okay, that is what is the exchange rate which we are using if he is paying us in USD.
Okay, and if it is negative, I mean, for example, if the invoice date exchange rate was 66,
Okay.
and
So yeah, if it is a
was
negative, more or less all the entries, but I mean some entries will get what you call skipped, or like it will be changed. But instead of exchange gain, or I mean I'm using the word exchange gain or loss, but instead of gain it will be a loss.
So it will be a penalty for us, right?
Kind of, yes. So if it is something like instead of 50 rupees, if it is a 58 rupees example. So in that case, it will be sorry, 150 into 60 is my using my original invoice rate. It will be, so here it will be 150 into 2 rupees, right? The
minus
difference is 2
300.
rupees. Yeah.
Yeah.
So it will
Minus
be something
300.
300. So it will be the journal entry will be exchange. If it is a loss, then exchange gain or loss will be debited.
Hmm.
Bank account is credited. Okay.
Okay.
So if you look at this entry, the net amount whatever we have received is 9,000 plus 10,000 minus 300, 9,700. So it's a loss for us.
Okay, got it.
Okay. I mean that's how all these things work if there is an exchange gain or loss.
Is there any setup that whenever these kind of transactions are there, use the current day Arvind?
There is nothing called current day. See, as far as the invoice is concerned, you have created the invoice, the what do you call, the date and everything is populated, done and dusted. Okay, but when you are creating a receipt, the only option left for us is create, click on exchange rate, and you can select your own exchange rate. So if you do not want to get into all this stuff, what you can do is one option would be select the rate type as user, use the same exchange rate whatever is entered during invoice. So at the time of invoice creation, the exchange rate was 60. So you can use the same exchange rate of 60. Then you will not get into this exchange gain or loss. But in a real world, that is not the scenario. So that is the reason why I had given this example. Right? In a real world, your exchange rate fluctuates on a daily basis.
Okay, yeah, I understand now why they are giving this user option on the screen.
Yeah. So yeah, you are right. Like in some specific scenario, you say that I do not want to get into all the stuff. I just want to use the same exchange rate as that of invoice. Then yes, you can do that. You can go to the user type and check whatever is the exchange rate which is used in the invoice and use the same exchange rate here. Okay. So that is the one option. Another option would be, the other thing is basically if there is really no fluctuation in the exchanges, that is like on this invoice is created on say 10th of September, and today is say 7th of October, we are creating a receipt. For some reason the fluctuation is such a way that on 10th of September invoice the exchange rate is 60. Again it has fluctuated some 54, 55, 56, 58, 65, 64, and again for some reason it's just a coincidence, today again it's same 60. Okay, then also you, without your entry, I mean you're just say selecting the exchange rate type of corporate, exchange rate is 60, then also you will not see the impact of this exchange gain or loss. So it all depends on the fluctuations in the exchange rates. So in our current client, we are actually dealing with close to I think 150 currencies. There are some currencies, and our functional currency is USD because our country is our company is located in US. There are some scenarios wherein there are some currencies I don't remember. I think VND, which is Vietnam dollar, or some other countries wherein for entire 1 month there is no fluctuation in the exchange rate. It's always same for some reason. So in those scenarios, if I do any kind of a cross currency receipt, I will not be able to see this exchange gain or loss because there is no fluctuation in the currency. Okay. Did I answer your question, Narendra?
Yes, Arvind.
Okay.